afternoon, everyone. Like Rob said, I'm Chris McCoy. I work with the Local Government Services section of the office. I am with the Southwest region, and we are going to talk about notes to the financial statements today. I don't know how many of you have attended our 3-hour notes training sessions that we put on across the state. I'm sure some of you have. If you have attended it, this is going to be kind of a refresher course for you. If you haven't attended it, and this is your first time hearing about this presentation, this is kind of like the Cliff Notes version. Hopefully, all of you have received a PDF version of the handouts, and you either received a village or a township, which is the two examples that we're going to be using. What it has in it, it has a sample of OCBOA reports, and it has a sample of regulatory reports. It also has some calculations in it on how you get some of the numbers in those reports. We're not going to go through all of that today, but at least if you have the example and the handout, it'll be there for a reference for you for later on, because I know these are going to be coming up fast, and we're going to have lots to do. So let's dive right in, and we're going to look at, first off, why are you having to do this? And we've received this question quite a few times, and we're actually going to go through some of the frequently asked questions. I'm going to change it up a little bit. In the PDF that you should have received, the handout, if you look at page 13, which is at the top left-hand corner, we're going to go through the questions in the handout, not necessarily what you see on my screen. But I'm going to read you some questions, and I'm going to read you some answers. And again, you don't have to have the PDF pulled up right now, but it's there for if you want to go back later and, well, what did he say about this? Well, that's why we're going to go through these. So you'll have the questions and the answers. Question 1, when are local governments required to prepare notes to the financial statement? Beginning with the year ending December 31st, 2016, you must file a full set of annual financial statements. The deadline for filing, if you are OCBOA or if you are a regulatory filer, is 60 days from the year end. So what that means is you have to have everything ready to be filed and finalized by the end of February. Okay? And all these questions and everything we're talking about today is the result of AOS Bulletin 2015-007. It is available on our website, and I'll show you at least one place here shortly where you can get a copy of it if you want to read through it, the whole bulletin. Question number 2. The auditors have always prepared my notes in the past. Are they still able to do so? The answer to that question is yes, they are still allowed to prepare the notes via a non-audit service contract. However, I just got through saying in the last question above that these notes have to be prepared by the end of February. And if you have an independent auditor, we all know what's going on then. They have tax season going on. They have a lot of clients that they're going to be either wrapping up or working on. And so they may not have time to prepare your notes by the end of February. So therefore, the fiscal officer should prepare and file the annual financial report, including the notes to the financial statement. Basically what we're saying is, you as fiscal officers, it's your responsibility to make sure these things get done. Doesn't matter if you do it yourself or you contract out someone else to help you, it just has to get done. But they are still allowed to do that. Next question. What is the penalty for not filing notes to the financial statements by the deadline? And I'm going to read this answer word for word as far as what's in the handout to make sure that we're perfectly clear. Answer. If notes are not included with the annual financial statements submitted via the Hinkle system, the annual financial report will be considered incomplete and could be subject to non-compliant citations and an unauditable declaration. The notes to the financial statements can be refiled at the time of the audit. However, they will be subject to the same as listed above. So if you don't get your notes filed along with your financial statements by the end of February, then there is some consequences. And like I just said, it could be, you could be deemed hit with a non-compliance citation, potential unauditable, and we don't want that. That's why we're trying to go through all these trainings and help you so you can get these things done and filed on time, and we avoid that problem. Next question. If a local government receives a basic audit or an agreed-upon procedure, is there still a requirement to file the notes in the financial statements? The answer is yes. Local governments are still required to file the annual financial report every year. So every year for this to be completed, you have to file both your statements and your notes by February. And UAN can help you file the statements, but you have to prepare the notes yourself and get them ready to be filed via the UAN closeout procedures and closing process. They'll help you get it filed in Hinkle, but you still have to prepare the notes. Next question. If a local government has a 2-year audit, is there still a requirement to file the report annually? Again, the answer is yes. You have to file in the Hinkle system every year, so you're having to update the notes every year. Next question. If a local government uses the UAN network, is there still a requirement to file the notes? Again, the answer is yes. Sorry to sound like a broken record, but that's unfortunately, that's the answer to all these questions. The answer is UAN entities will be able to meet the filing requirement through the year-end closing process. The fiscal officer should prepare the notes prior to completing the year-end closing procedures in order to get filed. So once we start this, or once we go through this example today in this presentation, hopefully you'll be able to get started early and get your notes done. Final question. Does the auditor state have any resources that will help local governments prepare and file the annual financial report? The answer is yes. And we're going to show you briefly where some of these resources are in just a second. In case you don't follow along with what's going on the screen, or you forget where to find some of these things, if you read the answer in the example, it actually has the steps that you need to take, and everything's going to be able to be found on our website. So it's all right there. If you don't get something written down or you don't follow it today, don't worry. It's right there for you. So that's all with the frequently asked questions. The only other thing I will add is make sure you are consistent when you're doing these notes to the financial statements and what you file. If you file under regulatory with UAN, if you file regulatory statements, make sure you're preparing regulatory notes. If you file OCBOA statements through UAN, make sure you're preparing OCBOA notes. The reason why is whatever you file, that's what audit's going to audit to. And we don't want to have a case where you file regulatory statements and you file OCBOA notes. That just leads to a whole bunch of confusion. So at least if you try your best you can. I know this is the first year through, but try your best to be consistent and file either regulatory or OCBOA. So, how do we get started with all this? Okay, if you look on the slide, there are shells available on the Auditor State's website, and we're going to show you where those shells are shortly. This next bullet point is probably the best advice I can give you. If you can, contact the auditors, whoever did your last audit. They may be able to send you their notes file, either in WordPerfect or Word, or some kind of word file, processing file, and you can use that as a starting point. If you can get that file, that's going to save you some time, because you're going to have a lot of the stuff that I talk about today. You're going to have it already set up, and all you're going to have to do is just make a few modifications here or there. You won't have to start from scratch. That's the best place to get your information. If you can't get the file from your auditors, look at the prior audit report on the Auditor State's website for your entity. Again, In just a minute, I'll show you how to get there and how to do that. But that would be the second approach, is if you can't get the word file from audit, go there, and that way at least you'll have what was in your prior year audit to start with. We're going to go over each note. We're not going to give tips on how to fill it in, but there is, like I said earlier, there's examples in the handout in the PDF that will walk you through how to do some of the calculations for some of the numbers you need. Pardon me. We're just not going to cover that today. And finally, remember to customize every note for your entity. If it doesn't apply to you, don't put it in there. Okay? You don't need to be worried about stuff that doesn't apply to your entity or unnecessary wording or things like that. Only put in your report what applies to you. Okay. So now, and we're going to go to our website in just a second. If you go to www.ohioauditor.gov, we're going to show you how to get to where the examples are. So you're going to go to Internet Explorer. We're going to pull up our website. And across the top of our website, you'll see something called Audits, Local Government, Open Government, Initiatives, and Resources. If you hover your mouse over the Local Government tab, it brings up a drop-down menu, and the first item in the drop-down menu says References and Materials. So if you click on References and Materials, it will pull up another web page, and if you look down the left-hand side where it says Reference Materials, the third item down says Financial Statement, Shells, and Footnotes. If you click on Financial Statement, Shells, and Footnotes, it now takes you to another web page with different examples for different types of entities and how they file. So the first thing you're going to do is click on how you're going to file. Are you filing GAAP financial statements? Are you filing OCBOA financial statements? Or are you filing regulatory cash financial statements? Because I'm assuming most of you are going to file regulatory, since that seems to be the consensus with most of the presentations I've done. If you click on regulatory cash basis financial statements, it will take you to another part of our website, and it shows you all of the different available options for all the different types of entities out there. Okay? So as you can see, it starts off with an agricultural society, Adam H. boards, airport authority, cemetery, so on and so forth. You'll see over there it has financial statements. If you're on UAN, which that's why we're here, you're on UAN training, like I said, UAN will be able to file the financial statements for you, so all you're going to have to worry about will be the notes and possibly the worksheets. Okay? So if you can't get the file from your auditors, and if you click on one of the notes, which I'm not going to do, but if you click on one of the notes files, it will actually bring up a set of notes for you. And you can use those as a starting point if necessary. The other thing that we are trying to do, we are trying to make sure that all of the notes are updated by the first part of January. So that way it'll have all the latest and greatest wording in there that you'll need, and you'll see what I'm talking about as we start to go through the presentation. But it will have things in there that you'll need, and what you'll need to do is you'll need to check back each year so that you can update everything, because you'll have what you're doing for 16. That'll be your notes that you're going to file, this time around. Then next year, you're going to be filing 17 notes. Well, there's going to be things in there where the wording is going to change. And you'll see that as we go through the slideshow here again throughout the presentation. So you want to make sure you're comparing some of the standardized wording to the notes that's out here on our website and compare that to what you have in the prior year. Okay? So, the other thing I'm going to show you, we're going to back out one level here. The other thing I'm going to show you is it's in the same screen where the GAAP basis and the OCBOA basis and the regulatory basis financial statements, it's on that screen. There's another place called Other Specialized Footnote Disclosure. If you click on that, what it brings up is different types of footnotes for different types of entities, such as standard wording for OTARMA for 14 and 15. If you have a public entity pool, if you have if you're part of the Ohio plan, if you have the Ohio Municipal League self-insurance, they have some standard wording out here for if entities are involved in those types of organizations or those types of pools. And you can actually click on here to see what the standard wording is rather than actually going into our notes. The only other thing I'm going to show you right now while we're out here is if you go back up to the top and you look at the 5 main categories, audits, local government, open government, so on and so forth. If you hover over the audits tab, it pulls up another drop-down menu. And if you go to the bottom of that menu called Search Audits, and you click on Search Audits, this is where you can actually go find your prior year audit reports. And it will have all of them that's listed out there. I believe the website goes back to, I think it's 1998, 2000, somewhere around in there. So any audit reports that have been released since then should be out here on the website. So if you need to go get your information, the prior year's information, from our website, that's how you go do it. Audits, search audit, and then once you click on search audits, then you can just type in your entity name. You can type in what county you're in, what fiscal year you're looking for, so on and so forth. If you're clicking on, if you do have to use the shells, they actually have highlights within the shells. Some of the highlights are yellow, some of the highlights are green. They mean different things. The yellow is helpful guidance, and the greens are generic information that you modify it to fit your entity. If there's something in the shells that doesn't apply to you, like I said earlier, just take it out. Just remove it. Okay? So we have different things in there to try to help you out the best that we can if you have to use our shells. So now we're going to get out of our website for right now. We'll go back to the main page because we're going to use it again here a little bit later in the presentation. We're going to go back to the presentation slides. And hope everyone's ready to get started on the notes themselves. So, as we dive into the notes, as you will see, are numbered. Note 1, Note 2, Note 3, et cetera, and et cetera. Each note takes care of a different piece of the report, and that's what we're going to go through, what typically Note 1 entails, what Note 2 entails, and they're set up the exact same way as what the examples are that you have in the PDF. So when I talk about Note 1 or Note 2 in these slides, they're going to relate to the notes that are in the PDF samples that you receive. I know we have a lot of entities out there besides townships and villages, but those are the examples that we're going to stick with right for today. Again, if you need the samples, you saw how many entities we have out there that we have samples for, so you can hop out there and see if there's something that will correspond for your entity if you can't get the notes from your prior audit. So note 1, Note 1 describes the services that your village or township provides or your entity provides. One of the things that's in there, it just talks a little bit about what kind of services you offer, what you are, if you're a village, a township, a library, a fire district, so on and so forth. Talks a little bit about the kind of services that you provide. If your village, your township contracts with a major service with another entity, you need to put that in there. We have a couple of examples. If the village is paying the county sheriff for specific police protection, so you have a contract with the local sheriff's office and you pay them money to provide extra patrols or so on, that would be something you would want to put in there in Note 1. If you're a township and let's say you pay a village for fire and emergency medical services, then you would also want to put that in there as a service that you actually offer. It's just you're paying someone else to provide it.
Just click OK.
Also, yes, sir?
Just click OK.
Oh, okay, sorry. Okay.
You can close that too.
Okay. Back to the presentation. Sorry about that. If you're in fiscal distress, so if you're an entity that has been declared in fiscal caution watch or emergency by the Auditor of State's office, then you would also want to disclose that in Note 1. Now, I'm sure we have entities out there that think they're in fiscal distress on their own. That's not what this is meant to cover. This is meant to cover actually being declared by the office in fiscal caution watch or emergency. And if you have had that happen, then you want to put that in Note 1. You also want to list out some of the other organizations that your entity is a part of. We'll talk a little bit more about that when we get to one of the other slides in the back. But that pretty much covers Note 1. Again, just a little bit about your entity and what kind of services you provide and who you are. Moving on to Note 2. Note 2, most of this note is standard language. You will just leave as is. Again, if it applies to you, leave it in. If it doesn't apply to you, take it out. I know I sound like a broken record, but again, we're just trying to reinforce you don't have to worry about if something doesn't apply, you don't have to worry about it. Just make sure that what does apply to you, you have in there. Some of the things that we have as far as standards that may change in the standard wording for each entity, fund types. So, for example, if you're a township and you have special revenue funds, and a few of those special revenue funds are significant or major funds, you may have a road and bridge fund and a gas tax fund that's major. Okay, and you're going to want to describe what those two major funds are for your entity. We may have another township that the road and bridge fund is not significant, but they have a cemetery fund that's significant. Okay, they're not going to talk about road and bridge. They're going to talk about the gas tax and the cemetery fund. So UAN actually has a report, I think it's a report that you can run to help determine what your major funds are, and that would be the guidance that you would use to fill this in. Okay? Whatever your major funds are for your entity, that's the ones that you want to talk about. Okay? Same thing with villages. Our example, I believe, has a street fund, fire and police. Well, if you don't have fire and police, obviously you're not going to include it. Okay? So you're just going to adjust those notes as needed. The budgetary process, again, this is something else you can update depending upon what your legal level of control is. Do you have carryover encumbrances at the year end? Do you not have carryover encumbrances at year end? Again, just read the note, see what applies to you, and adjust it accordingly. Another final example on the SSAP note is deposits and investments. If you don't have any investments and all you have is money in a checking account, then you're not going to have to worry about disclosing any kind of investments in the SSAP or Note 2. If you do have investments, such as Star Ohio, or if you invest in Fifth Third Securities and they have investments, or if you have common stock, those types of things are investments, and you'll have to disclose those in the note 2 under the deposit, cash and deposits and investment section. As you go through, you'll also see if you actually set the examples beside each other and compare them side by side, you'll see how the calculations and the note disclosures differ between what is required for regulatory and what is required for OCBOA. Note 3, accountability. It says compliance, but we're also going to throw what they call accountability in here. Basically what you do is you list any budgetary violations that the village, township, fire district, so on and so forth, that your entity had during the year by fund. So, for example, if you have expenditures plus encumbrances that exceed appropriations, well, you know that's not supposed to happen. So that would be a compliance problem if you've spent more than what you actually appropriated. Another problem is if you appropriate or if your appropriations exceeded your estimated resources plus carryover balance. So if you plan on spending more than what you had available to spend, obviously that's another compliance problem. Hopefully we don't have anybody out there with any of those, but it could be the case. And if you do have that situation, you have to disclose it. Also, if you have any funds that have a deficit cash balance at year end, you have to disclose those as part of this compliance note. So for those entities that we deal with that are usually in fiscal caution, watch your emergency, there's the possibility that they have negative fund balances at year end. They need to disclose those deficit balances at year end as part of this compliance. Okay? Do your best and document what you do. And later on during your audit, if the auditors find some other kind of compliance issue or something else that they want to add to this note, they may do so, but at least you'll have the basics. You'll have what is in there that you have found, and if they need to add something later, then they can do so. Note 4, budgetary activity. This differs. This calculation is really different when you're dealing with regulatory filers compared to OCBOA. And so I'm going to throw out a couple page numbers for you. So you might want to write these down so that way you can go back and take a look in your example later on after the presentation. If you're filing regulatory statements, if you have the township example, you want to look at page 21 or start on page 21. If you have the township OCBOA example, you want to start on page 23. And again, that's the numbers up in the top left-hand corner. If you have the village example for regulatory filers, you want to look at page 22. For OCBOA filers, you want to look at page 53. And what makes them so different is for regulatory filers, you actually have to disclose by fund type 4 different things. You have to disclose what your budgeted receipts are, and you have to compare those to your actual receipts by fund type. Okay? You also have to disclose what your final appropriations are, and you have to compare those to the actual amounts that you expended during 2016. So the budgeted amounts, the estimated revenues, and the appropriations are going to come from your certificate of estimated resources from the county auditor and the appropriations that you have that have been approved and are on file with your county auditor. And you're going to want the last, greatest, final set that was passed or was filed with them. The actual receipts and the actual expenditures are going to come from UAN. These are going to be the numbers that are going to be generated from your UAN reports. And so what you do, you'll see the table and it says, it'll start off and say, okay, here's the budget number, here's the actual number, and here's the variance. That's for regulatory filers, and it applies both to, it's the same disclosure if you're filing with townships or if you're filing with villages or another entity. Same type of disclosure. For OCBOA, if you do OCBOA statements, there's notes, or you have a chart that reconciles the difference between the cash balance of the general and non-major special revenue funds with the budget basis. So what that does, it actually says, okay, we're going to take a look at what you've reported in UAN in your financial statements, and we're going to compare that back to what is actually on your budget, your budgetary statement. And the things that could be different, you could have things like adjustment for encumbrances. So if you have outstanding encumbrances at the end of the year, those are going to be different when you look at your budget statements compared to what you actually are reporting in your financial statements, your OCBOA statements for your report. So you would have to disclose that. And again, if you look in the examples, you'll see there's page numbers listed that shows you how you do the calculations and where you get the numbers from. I know that's kind of confusing, but hopefully once you get to where you can actually print off the examples and take a look at them, hopefully it'll make a little bit more sense about where the numbers are coming from and what you need to disclose. Note 5, deposits and investments. If you have regulatory notes, you have a chart that lists all the cash and investment accounts by type. So all accounts of one type are added together. You don't have to list out each bank account separately. All you have to do, you have to say, here's our total deposits. Here's anything such as if you have CDs or if you have Star Plus, okay? You're going to add those. You're going to have those separated out to show that we have money sitting in those type of accounts. And then you're also going to disclose any investments that you have separately. So if you have, like we talked about, if you have Star Ohio or if you have the Fifth Third investment accounts, you'll list those out separately, and you'll be able to see a sample of those in your handout. If you have OCBOA notes require more disclosure, okay? You have to describe the amount of deposits and what portion was uninsured by FDIC. And if you have it, I believe it's collateralized and uncollateralized. Also, the OCBOA notes, they provide more detail on the investments. So rather than with regulatory, you kind of put everything in one table. For the OCBOA notes, you actually break investments out separately, and you show what kind of investments that you have during the year, okay, or had during the year. And you would show what kind of investment maturities that you also have. So if you have investments that are maturing in less than a year, if you have investments that are maturing in 2 to 3 years, you have to break those down separately as well and show what kind of maturities that you're looking at as far as when your investments are ready to be turned in, cashed in. Note 6, property taxes. For regulatory notes, it's pretty much standard wording. There's not going to be a whole lot you're going to have to change. The only thing you'll have to look at is if you have public utility taxpayers, or if you don't have public utility taxpayers, you'll want to modify the note accordingly. If you file OCBOA, notes, you'll have the same type of wording in there that talks about, the different kinds of property taxes and property tax rates, so on and so forth. But you have an additional disclosure that you need to make. You will also need to get the full tax rate and the full assessed values for the different types of property that are being taxed, and you can get those from the county auditor's office. And those will be presented in a table, and again, you'll see this when you pull up the sample as to what it looks like. And that's the difference in the two, really. They're pretty much the same note with the addition of disclosing the tax rate and assessed values for OCBOA. For those of you that have income taxes, you also have to disclose income if you have it. If your village levies an income tax, you need to include it. Obviously, if you don't have an income tax, you don't need to worry about putting it in. So all the townships can breathe a sigh of relief here. You don't have this issue. You describe what types of income are being taxed, and you include the tax percentage. Okay? What you want to do, you want to look at your most recent income tax ordinance and or the ballot language if some of the tax was approved by voters. If a portion of the tax is required to be used for a specific purpose, you also need to say that in the note. If you have any unvoted income tax that you put on, you also want to disclose that. If you have both voted and unvoted, then you need to disclose those separately as well, along with any restrictions or specific purposes. Note 7, interfund transfers. For regulatory filers, you're not required to disclose any transfer information. However, if you file OCBOA, you have to describe transfers made during the year and their purpose. The shell, if you look on our website, includes a chart that if you only have one or two funds with transfers, so let's say the general fund made a transfer to, the cemetery fund, if you're a township. Okay, and that's the only transfer that occurred during the year, then you can just put in a sentence that basically says that and describes why you had to do the transfer to the cemetery fund. So not too much to worry about there. In some of the examples, they didn't have transfers. I think for the township, they didn't have a transfer example. But that it's pretty much what I said. You can use that as a guide. If you need to, I think the village does have an example. You can pull up the village sample on our website if you need to see a sample. But that's all that you have to worry about for transfers. Note 7 for interfund advances. If you have any advances that are not repaid at the end of the year for both regulatory and OCBOA, you need to include what the purpose was for the advance and how much is still outstanding. So let's take our same example. If we had an advance that we're expected to be repaid, we advanced it from the general fund to the cemetery fund, and the cemetery fund did not repay that at the end of the year, then you will need to have note disclosure in both the regulatory and the OCBOA describing that the advance was still outstanding and that it was made from general fund to the cemetery fund and what the reason was as to why the advance was made. Risk management. This is where you talk about your insurances and what kind of coverages that you had. So, for example, a lot of townships would have OTARMA that you purchase your insurance through. And as a matter of fact, that is the example for the townships on our website, and it talks about the different types of insurances and who it's with. For regulatory filing, again, you're talking about the types of insurances, and you only include those that apply to your entity. If you participate in a risk pool for insurance, you need to use and update that section with the information for the pool and what all it covers. If you're self-insured, for a type of insurance. You also need to update that wording and explain what's going on for the self-insurance portion. If you're OCBOA, the example has a chart of different types of coverages and amounts. You can fill out the chart for each different type of insurance your entity has, including the amount of coverage and deductibles. If you're participating in a group rating plan, you can also update those. A lot of times what we do, because we work with a lot of schools and a lot of cities and counties, they will actually send over their note to their insurance agent, and a lot of times the insurance agent will help them fill out their information. So if you have to fill out the chart or so on and so forth, and you are not sure what numbers need to go in there, you can always contact your agent for help, and hopefully they can help you out. Note 9, defined benefit pension plans. These are all the payments that you all make to OPERS and Ohio Police and Fire, and if you pay into Social Security and any other pension plans that you pay into. It depends on what your employees participate in. You want to make sure that you're using the most up-to-date information for these, because these notes change every year. And so what you're going to do, when I showed you where the examples are, even the regulatory notes, they change just like the OCBOAs change. So you're going to want to go in every year and make sure what's in the sample note disclosure on our website is what you have and you're putting in your report. For the OCBOAs, there is something else that's additional you need to add other than just making sure your notes or your wording is updated. You also have to include the amount that your entity was contractually required to pay to OPERS or OP&F or whomever you're paying into, and that would be the amount during 2016 or 2017, whichever year you're in. It would be the amount that you paid to the retirement systems, okay? And it would be the employer's share that was paid to the retirement system. For villages and people that pay into OP&F, if you only are paying in for police or you only are paying in for fire, make sure that your notes say that, because you don't want to put in there, hey, we're paying for police and we're paying into Ohio Police and Fire, and we're paying for police and fire, when really you're only paying for one or the other. So just make sure you're adopting it to whatever you're actually doing and whatever applies to your entity. That's what goes in your notes. If we go to Note 10, which is the Postemployment Benefits, it's the same thing I just talked about. You're going to want to go to our website, to the samples for your entity, and make sure you have the latest and greatest wording every year, as we're going to try our best to keep those updated and have them ready to go by the first part of January each year. Again, you want to, if you have amounts that have been contributed for OCBOA, if you know what the amount was that was contributed for health care for the current year and the prior 2 years, you need to disclose that. Like the bullet point says, there is a worksheet to help you calculate this, and it's included in the handout. So hopefully it won't be too hard to follow, and you'll be able to easily calculate the information that you need. If you filed OCBOA the prior 2 years, you can actually go back to your prior 2-year reports, or at least the last year report, and hopefully it will have the prior 2 years that you need. Hopefully you won't have to calculate that, and you only have to calculate 2016 amount. But again, you update it for whatever you have. If you have OPERS, police, fire, so on and so forth. Hope you're staying awake. Hope I haven't bored you to death yet. We've still got just a little ways to go, but not too much longer. At least for my portion, anyway. Next up is debt. What you're going to want to do is describe the various types of debt obligations that your entity has including all bonds, notes, loans, leases, et cetera, et cetera. I'm going to give you a couple more page numbers to look at for this one. So if you have the township example, you're going to want to look at page 25 if you're filing regulatory. If you're doing OCBOA, you're going to want to look at page 65 and 66. If you have the village example, you're going to want to look at page 25 and 26 if you file regulatory. And if you do OCBOA reporting, then you're going to want to look at pages 62 to 64. And those are the examples that you're going to want to follow. So whenever you go to look at those examples, what you're going to see is, for regulatory filers, you have to list out all the different types of debt that you have. So, if you have 2 different kinds of loans or 3 different kinds of loans, you're going to have loan 1, loan 2, loan 3. If you have 3 or 4 leases, you're going to have lease 1, lease 2, lease 3, and of course you're going to describe what those leases are for. And then you're going to list the amount that's remaining, the amount of principal that's remaining to be paid on the debt, and you're also going to list the interest rate. Okay? That's the first table. Second table is you're going to want to list out what your principal payments are for the next 5 years, or what your principal and interest payments are for the next 5 years. Okay? And you're going to want to show, for you all, it would be 2017, 18, 19, 20, and 21. You're going to list those 5 years separate. And then if you have debt that goes beyond those dates, then you're going to want to list those in 5-year increments. So let's say you have debt that goes out to 2030. So you would have 2022 to 2026, and then you would also have 2027 to 2030. So that way you can list out all the payments that are going to be made. And what you're going to do with that table, you're actually going to list it out by total loans, total leases, total notes, total general obligation debt, whatever you have, you're going to list each one of them in total in a separate column, and you're going to list it by years. And you can, again, you'll be able to see the example in the notes in Note 11. If you file OCBOA, the table's a little bit different. You have to disclose more. You actually have to disclose what your beginning balance is, if you've issued any new debt or entered into any new loans or leases or so forth during the year. You're going to show what your principal retirement is during the year for each debt. And then you're going to show what the outstanding balance is as of December 31st, 2016. Okay? So what your beginning balance was, so what the debt was when you started the year, January 1, if you issued any new debt, what your principal payments were that was made during 16, and what your ending balances are at the end of 16. The other thing you're going to have to explain is what is your due within 1 year amount. So how much in principal are you expected to pay during 2017 on each debt? You'll also have to list that as well. The tables are very similar. The second set of tables are very similar. The only difference is you actually have to break it out by debt type and by loan type, and you're actually going to separate principal and interest this time. Whereas in regulatory, you can combine principal and interest into the same column. For OCBOA, you actually have to show principal and interest separate. But the same 5-year rule applies. So you're going to show it for the first 5 years, which would be 17, 18, 19, 20, and 21, and then in 5-year increments for the rest of the time, whatever debt you have remaining to pay. Okay? And you'll break those out. If you look at the example, you'll actually see the broken out between, for the example for townships, it has loans and leases. But if you have other debt, the same scenario will apply. Okay. Note 12, construction and contractual commitments. If you have any significant construction or contractual commitments that have occurred during the year and you still have not paid them off, so let's say you're building a fire station for $1 million and you sign the contract with the construction company for $1 million, you're going to want to disclose, here's how much we signed the contract for $1 million, here's how much has been paid, and here's how much we still have outstanding on the contract. You'll see the examples and some of the wording that's in there. As you can see, there's one example right below it. If you do OCBOA, you also have to list out your outstanding encumbrances at year end, since those dollars are also set aside for a particular use. And what you're going to want to do is you're going to have a table, and the table will show what your outstanding encumbrances are for the general fund, for any major special revenue funds, or any major funds that you have, and then your total non-major funds to come down to for a total amount of outstanding encumbrances at the end of the year. Okay? If you do not carry over encumbrances, if you have no encumbrances outstanding at the end of the year, and if you don't have any significant construction going on, then you don't need Note 12 at all. Okay? Contingent liabilities. These are items that could impact the entity's financial position in the future. So, if you are involved in a lawsuit of any kind, if you have a grant that's subject to audit, where you may end up having to give money back, so on and so forth, you need to disclose that. And the easiest person that would, or the best person that would know this type of information is talk to whoever your legal counsel is, your village solicitor. Write them a letter, have them write a letter indicating if there are any legal issues that could impact the township or the village's financial position. Okay? That way you have it in writing that you've addressed this issue or you've tried to address this issue. If you have items like this, I think there's some example wording in there that you can put in. You just need to disclose the basics. And if you have questions, you can always contact your auditors or you can contact us, and we can try to help you out. Notes 14 through 17, all these notes are related to if your trustees or if your council people are involved in different types of organizations. These are organizations that you as an entity may be involved with. Each organization will need to be analyzed to see if it fits the definition of one of the types of entities or one of the types of note disclosures. The definition of each type is listed in the shell to help you get started. So if you go back and look at the shells, it'll give you an example. This, again, is where your prior year audit reports are really going to come into play because your prior year auditors should have already done this. So you should know if you're part of a jointly governed organization or if you're part of an insurance purchasing pool. If nothing's changed, you should still be part of that pool. That would be the best place to start is look at your prior audits to see what they have you listed as part of, and then you can go from there. Another place that you can look is if you want to look at audit reports from other entities in your area, such as larger cities or counties or school districts. They may also be part of some of these organizations and have them listed in their reports. And if you look at their reports, it may ring a bell saying, oh, yeah, we're part of that organization too. We probably ought to disclose that as part of our notes to financial statements. Number 18, related party transactions. This is a list of any transactions that meet the definition listed in the shell, the opposite of an arm's length transaction. Here's the example I usually give. If you have a township trustee or a village council person that owns a hardware store and a lot of transactions are being handled by the entity through that hardware store, you need to disclose that. So that way it's on the up and up. everybody understands that, hey, these transactions do occur. We do need things from this store, and we do purchase items from this store, and we're telling you that we do this in the notes of the financial statements. If you aren't sure, if you have questions, if you have a situation like this, whether it applies or not, again, talk to your solicitor, your legal counsel. You can call local government services, or if your auditors are in there, you can even ask your auditors. Again, they may have something in your prior year audit reports if a situation like this exists. So hopefully somebody will be able to help you get your issue resolved if you think you have this going on. The fund balance note, for those of you that do regulatory, you can actually zone out for the next 30 seconds or so. This only applies to OCBOA reports. This note is not required, obviously, for regulatory. It is a chart that lists out the different fund balances or different types of fund balances that you have, such as non-spendable, restricted, committed, assigned, and unrestricted or unassigned on your financial statements. This note just provides more detail than what actually shows up in what is generated by UAN. There's a worksheet in the examples that we have that talks about how fund balances can be summarized. If you need more information on how to categorize fund balances, if this is kind of confusing and you have questions, we have it listed there that you can reference Auditor State Bulletin 2011-004. And it actually has a lot of the common village and township funds. It also includes libraries and how those funds should be classified. So if you have a fund that should be restricted, committed, or assigned, then you can actually go there and look and see in a lot of the more common ones, such as, street funds and gas tax funds and motor vehicle license funds and those types of things, they're listed there. And it tells you how they should be classified. Subsequent events, these are things that would have a financial impact that occur after year end. So, for example, if you are filing December 31st, 2016, but you went out for debt and you're actually going to get all your debt finalized by the end of January, let's say it's a significant debt issue, or you went out for a loan and you got a new loan that's significant. These are types of things you're going to want to disclose that could have a major impact on your financial statement. The only reason why they're subsequent events is because they happened after December 31st, 2016. Another thing that you may want to disclose if you enter into a major contract, like if you're going to build a new senior building for $1 million or a new fire station, if that occurs in January after December 31st, then you want to disclose that as a subsequent event. For villages, for Note 21, if you are involved in AMP Ohio, this is one that I would strongly encourage you to talk to your auditors or see what was in your prior year audit report, because there's some note disclosure that goes along with it. I don't believe that the examples we have out there, I don't believe there's anything in the examples, but hopefully either your prior year audits or your auditors will be able to help you out and fill that note out. Note 22, change in accounting principle. This would only occur is if you're going to change from one basis to the other. So, for example, if you're going to change from regulatory and you've decided, no, I want to do OCBOA now, then you would put it in a disclosure like this. It says change in basis of accounting, that you're changing from regulatory basis to OCBOA basis. So that's pretty much the only time you'll have to do that, unless we notify you from our office that something else has changed. Like when Bulletin 2011-004 came into play, that may be another case where you would have had to have done that. But this is the only one that you need to worry about for right now, is if you're changing basis of accounting. There's a couple other notes in our samples that I'm not going to cover. It's only things that may apply. If they do, fine, put them in. If not, then you don't have to worry about it. We're going to hold questions until the end. If you don't care, we're almost done. Hinkle system. Everyone is, like this whole presentation we've talked about, and I harped on it up front, everyone is required to use the Hinkle system to file their financial statements now. If you use UAN, which is why we're going through this training today, filing will be a part of the year-end closing process, which is why we're going over this presentation. Okay, we're actually going to switch for just a minute. We're actually going to go back to our website. So if we go back to ohioauditor.gov, if you hover over the local government tab again, you'll pull up the drop-down menu, and we're going to go down to annual financial reporting. And if we click on annual financial reporting, bear with us just a second. This talks about all the new guidelines. As you can see right here under the notice, there's a link to the AOS bulletin that we've been discussing about today, where the frequently asked questions are, so on and so forth. This is the bulletin that's driving this. Here's the general guidelines that give some of the ORC code sections, so on and so forth. Who has to file GAAP, OCBOA. A little over halfway down, this was where it talks about the Hinkle system and what you have to do to file. If you have any questions for the Hinkle system, you have to contact them via email. And you can see under the notice, under this notice in red, if you look at the second paragraph, there's the Hinkle system email address. You can contact them with any questions that you may have. If you continue to scroll on down, there's some helpful guides with some screenshots for different entities, cities and counties, school districts, libraries, townships, so on and so forth. If you want to see all of a synopsis of the frequently asked questions that we've received, I think it's about 25 pages long. You can actually click here on Hinkle System FAQs, and that'll take you to all the questions that we've tried to answer. If you need to file a waiver for some reason, you can actually click on the electronic filing waiver request for small governments, and it will take you to the waiver request form. There should also be a copy of this form in the very back of the examples that you receive. It doesn't matter if it's a village or township. And if you have to file or you're requesting granting an extension, you'll see an email link up here. It's on the right-hand side under filing extension. That's where it talks about if you have to file an extension, this is the email address that you would submit that extension to. Okay. I think that's the last thing we're going to have to go over on the internet. So we're going to go back to the presentation. We're almost done. Come on now. Okay. I'm not going to go through this, but basically what has to happen is when you are finished completing your notes, you have to put them in a PDF format. That's the way they get filed in the Hinkle system and uploaded into the Hinkle system. There's many different ways to get it into a PDF. You'll see on the screen here that there's just a few of the different ways to do it. Our office uses Adobe Acrobat. Another way that you can do it, if you have a printer or a scanner that you can scan your document so you can print it off on paper, you can scan it to yourself and save it as a PDF file. You can actually upload that, and that will be accepted by the Hinkle system. It just has to be in PDF. You cannot upload a Word file. The final thing to go over real quick is if you file OCBOA statements, okay, for entities choosing to do that, the annual financial report will include financial statements, notes, and the MD&A. If you look on our website, the MD&A is not required, but it is encouraged for OCBOA filers. So we would like to see, if you're going to file an OCBOA report, we'd like to see you do an MD&A. It's a document that goes at the front of the report, so you would actually have to PDF this as well, and this, along with your notes, would get uploaded into the Hinkle system. It includes tables and narratives, and it talks about comparatives between what happened with your entity last year compared to what happened to your entity this year. And if there's any significant changes that occurred, say revenues increased or expenditures increased or vice versa, you can actually talk about that by category. The MD&A is unaudited, but auditors will still read it and offer suggestions and changes. They basically look at it to make sure that if you have numbers in your financial statements or you have numbers in your notes or wording in your notes, that the MD&A is not saying something different. So if you put in that numbers increased during the year, when in actuality they decreased, that's what they're going to look for is consistency. They just don't want it. They just don't want what's in the MD&A to contradict the financial statements and notes. At the end, there is a current issue section that should only include items that have an impact on the entity's financial position and should be known facts, not wish list things or these are things I wish would happen. Just state whatever has happened during the year, or if you have voted a levy on, we voted the levy on, you can put something in like that, hey, this is going to affect us in future years, but the levy was voted on and passed during 2016. That's all I have for the slideshow. At this time, we'll take any questions that anyone has.
Yeah, they have questions.
We'll try to address a few of them.
I got one that says, okay, let's say they don't have the debt note, note 11. Do they have to renumber all their notes after 11?
You want the notes to follow in order. So, yes, I would renumber the notes after 11 if you don't have to have that note, because you want it to go in, you want it to be in sequential order.
Okay. So I can answer this one, but there's a question about, does UAN just take us to the Hinkle system and they have to upload it, or does UAN put it into the Hinkle system for them? The answer is, when you file the data that we'll show you later on today, we will file it into the Hinkle system on your behalf. We have a question about what makes a lease material.
What makes a lease material is if it's significant. It's a matter of judgment. It's what's significant to your entity. So, if we're looking at a very large entity and they enter into a lease for $10,000, that may not be significant to them. If you're talking someplace like City of Columbus or, Grave City or someplace like that, but for some of the small townships that I deal with on a daily basis, a $10,000 lease is significant to them. And so my recommendation would be, if you don't know, it's better to disclose it than to leave it out.
Well, I got another one here saying they lease a copier. So when they disclose the lease, is it just the base amount, or do they have to include charges for overages?
We're just looking, usually what we tell people, you're just looking at the amount that you're paying for the copier. So it would be just the lease on the equipment.
Got a question, if their last audit was an AUP, can they use those notes as an example?
With an AUP audit, I don't think they have much in the way of notes. So they would probably want to go back to the last actual audit that they had done. And again, that may be 2010, 2011, so on and so forth. But at least the basic setup for the notes would be there already for them. And then they would just have to go through and say, okay, even though it was 2010, 2011, what still applies for 2016, and then we can update everything else.
Okay. We also have a question about changing something to Word to PDF. Just as an FYI, we'll be going over that later on in the presentation.
What it was, if you attended the 3-hour presentation that we did, or the 2.5 hour, whatever it was, we actually showed people how to do a PDF file. We didn't go through that here because we just didn't have time. But what I tell people is that, most places either have somebody that knows how to do it. I've even said, contact a teenager, either your kid or either your son or daughter or grandchild. I'm sure they know how to PDF.
We're going to demonstrate how to save a PDF from a Word file a little bit later.
That gives them a reason to make sure they're listening later on for the day.
Got a question about what are the penalties for an honest mistake in the notes?
Here's what I would say. This is everybody's first time trying to do this. If you're going to do this on your own, this is the first time through. Do the best you can. Make sure that you're documenting what's going on, and keep a file. Keep a different file for each year. So when you do 16 this year, document everything that you do and why you're doing it. Then when you go to do 17s next year, you'll have the 16 file to reference back to. If audit doesn't like something that you're doing, or they don't understand a calculation, or need you to change something, then you can change it whenever it goes into 17 or 18, whenever they come in and see it. Give it your best shot. Do the very best you can and document whatever it is you do.
Okay, we got another question. When do you think the shells would be finalized for 16, then subsequently 17 and 18 on the website?
I can't answer 17 and 18 because that's too far out, I know. I spoke with my boss, and I think the shells for townships and villages are pretty well good to go. All the other entities, we are trying to get them done by the first part of January. Now, what the first part of January means is that the 2nd of January? Is it the first week of January? I don't have that answer. I just know we're trying our best to get them done as early as possible so that everybody can go out and utilize them. But if you're a township or a village, the examples that should be out there on the website, they should be what you see in the handout that we gave out.
Okay. We got another question about entity leases property out. Do those?
Okay.
Does that get disclosed in Note 11?
So they're actually collecting the money then?
Correct.
Okay.
If I'm reading it correctly.
That
Yes.
Note 11 is really related to the debt side of things. So Note 11 is really if they are leasing something and making payments on it. If they are the ones doing the leasing, then my recommendation to them would be to look at your prior year's audit reports or talk to your auditors, because that's going to be something different. That's going to be a different type of disclosure. It won't be part of debt.
Well, that's going to be it. We're going to take a break now until 2 o'clock.
Yeah, 15-minute break.
A 15-minute break. Thanks, Chris, for hopping on for here.
Thanks for having me, guys. I appreciate it. Everyone have a good afternoon.